Gold is now just $300 away from $5,000. A few days ago, that would have sounded extreme. Not anymore. Gold has rallied nearly $370 from around $4,325. And this morning, it came within just $3 of breaking $4,700. Then everything changed. Gold hit $4,696.79, failed to break $4,700, and suddenly dropped almost $70. That was the first serious burst of selling we've seen during this entire rally. So, is this finally the top? I don't think we have enough evidence to say that yet, because $4,700 isn't actually the level that concerns me most. The real test is higher. $4,750 to $4,880, and what happens there could determine whether gold attacks $5,000 or enters its first major correction of this rally. What just happened at $4,700? This morning, gold looked almost unstoppable. Buyers kept stepping in, pullbacks were shallow, and eventually gold pushed to $4,696.79. Then sellers finally appeared. Fast, gold lost $4,650 and dropped back toward the low $4,630s. That matters. Recently, pullbacks have been absorbed almost immediately. Today was different. For the first time, higher prices attracted serious profit-taking. But one $70 drop doesn't destroy a rally. The 4-hour structure is still bullish, and that's why the next downside area matters much more. $4,580 to $4,600. If buyers defend that region and gold recovers, today's sell-off can still be treated as a reset after an aggressive move. But if gold starts breaking and staying below that zone, then the correction becomes much more serious. So today's drop is a warning. Gold has a new problem. The daily chart tells us something very interesting. The trend is still extremely strong, but gold has moved a long way from its medium-term averages. That means the trend is bullish, but the market is stretched. Gold isn't automatically a short just because it has risen this far. Strong markets can remain overbought longer than expected. But assuming every dip will be bought is dangerous. After this vertical move, there is a huge amount of profit sitting in the market. Once those traders start heading for the exit, a $70 correction can become something much larger very quickly. Which brings us to the most important part of this chart. $4,754,880. If gold retakes $4,700, focus here. This is where I think the real decision gets made. Market starts confronting heavier historical and psychological resistance. If gold can break $4,880 convincingly on the daily or weekly chart, $5,000 would be only about $120 away. So $5,000 is no longer the crazy part of this story. Getting through $4,750 to $4,880 is what would make me worry. What I'm watching for is repeated failures, long upper wicks on the daily chart, and a breakdown in the 4-hour structure. And critically, U.S. Treasury yields turning sharply higher again. If those signals appear, the risk changes dramatically. We could be looking at the first genuine delevering move. After such a vertical advance, the downside could be violent. Two paths from here. Scenario 1. Breakout. Gold absorbs selling, retakes $4,700, and pushes toward $5,000. Scenario 2. Rejection. Gold reaches the zone, but repeatedly fails. The daily chart starts forming a top. Macro catalysts like PCE and Jackson Hole are sitting on the calendar, capable of moving inflation expectations and yields. I'm not calling a top because gold failed at $4,700 today. And I'm not calling $5,000 inevitable either. The real decision zone is $4,750 to $4,880. Break it and hold. And $5,000 moves directly into range. Can gold survive $4,750 to $4,880 first? This is Grand Markets. Subscribe for more analysis on macro forces. This content is for general market information and educational purposes only and does not constitute financial advice.